Hi, Skip Shanker here, and I just wanted to take a couple minutes and share an incredible success story about a family who bought a fixer-upper and built a ton of equity within a couple years. So let's check this out. So they bought this property in May of 2019 for $700,000. They did a renovation that was a total of about $47,000. When you add the soft costs of the contingency reserve and inspection fees and permit fees, the total of the purchase price plus the renovation costs was just over 750, almost 755. The appraisal that was done based on the repaired value came in at 770. So right off the bat, the buyers had over $15,000 in equity. But wait, it gets better. They remodeled the kitchen and the bathrooms, and they customized the house the way they wanted. And here on the right, you can see a list of all the improvements that they did. And here is a snapshot of the appraisal that shows how the appraisal is done, which is a little differently based on the hypothetical assumption that the alterations and repairs have been completed. So this shows that the appraisal came in at 770 right when they bought that house. So here's a couple of pictures. There's the before picture and the after picture. Here's the kitchen. You can see there was a wall that separated the kitchen and the family room, dining room area, and they took that wall out and they opened it and created a complete open space concept. Here's the bathrooms. These bathrooms were the original bathrooms from 1948, and they gutted those bathrooms and they modernized them. And 7 months later, 7 months after they purchased the house and did their renovation, they refinanced, which is what we encourage people to do. And this is the power of the renovation loan. You can buy a house, get money to fix it up with a small down payment, just 3.5% down. And then 7 months later, a year later, based on the equity that you built in, you can refinance. They had the benefit of a 79% loan to value. So they went from 3%, 3.5% equity all the way to just over 20% equity. And what that 20% equity related to was $180,000 in equity that they built. And they were able to refinance, get a lower interest rate, and eliminate their mortgage insurance. So what renovation loans allow you to do is buy fixer-uppers, customize it the way you want, and enjoy future equity. Again, the down payment was just 3.5% of 755 approximately, which was about $26,000. 7 months later, they turned that $26,000 of down payment into equity of $180,000. And then 2 years later, we just pulled up a Zillow estimate, and we don't know, those aren't always exact, but Zillow says this house is now worth $1.2 million. Again, this home was built originally in 1948. There's a ton of homes out there that are old that need modernizing. So these opportunities are out there. Don't be afraid, and we can help you and guide you through this whole process. They modernized the kitchen and bathrooms. They put a new forced air heating system in. They updated the electrical. They painted inside and out. Looks like they put a new driveway on with their own money. They put new windows in. They removed that wall between the kitchen and dining family room and made a open concept. And now they're enjoying the benefits of a beautifully remodeled home with almost $500,000 in equity, over $450,000 in equity based on the current Zillow estimate. So this is the power of the renovation loan. Don't be afraid to buy a fixer-upper.